Hello Master Traders, this is Dan and I wanted to show you some of the closed trades in our weekly options trader last week where we booked 19 of 20 gains. That is statistically impossible if you don't have an objective high probability approach like we do. Some others say that trying to predict a direction on the charts is a mere coin flip, and I think that assumption is just a joke. Our approach in selling credit spreads around high probability setups has an astonishing success rate. So let's go over them. So 19 of 20, 25% batting average last week. Spiders here, when we had the breakdown, we sold an out of the money bear call credit spread and into weakness on support. We closed them out at a profit. Then we got the bullish gap up, which we were expecting with our support and pullback on the weekly chart, and we had the oversold market internals that said this is gonna spring higher any day now. We were just waiting for that trigger. The trigger occurred on the gap up day and over the 30-minute high when it held the strength of the gap. We did the same thing in the Qs. We did the same thing in a couple of the FANG stocks. Facebook, we had a call spread, closed it into weakness, then did the opposite. On the stabilization, the 2-bar reversal here, bottoming tails, we sold an out of the money put spread. And the weekly options trader just specializes in selling these credit spreads that expire 10 days or less. So the premium that we're taking into our brokerage account, the intent is for that to be profit with the support or resistance levels holding for a couple of days. So it's just a beautiful strategy. Amazon, we did the same. On this bearish gap down day, we sold an out of the money call spread, covered it into weakness, and then on the bullish turn with the market, we sold out of the money put spreads. Okta, we had a lot of breakouts showing great relative strength to the broader markets too. So Okta, we had a put spread. AMT, we had a put spread. ANTM, we had a put spread. Even though that one, notice that it just went sideways in a coma, showing relative weakness to the market. But the beautiful thing is, we still make money through time decay. So the people who bought call options expire worthless, and those who bought puts expired worthless, and we sold an out of the money put spread. NVIDIA, we had a put spread off the low, climactic buy setup on support daily, weekly. Avgo, another semi put spread coming out of that little retested bottom. TLT, the bonds on the bearish island gap down, we sold an out of the money call spread. Netflix, we had a couple put spreads on the breakdown failure. STZ, on that climactic buy setup over this bottoming tails high, we sold an out of the money put spread. TTD, etc. The bar, this beautiful 30-minute high here coming out of this multi-week consolidation, we sold an out of the money put spread, covered it into strength. So that's just a sampling, but as I said, I highly recommend that you take our weekly options trader for you to get trades like this. We give you the setup, we give you the strikes, we give you the exact management, the stops, when to take partial profits. We walk you through the trade, and you're learning as you walk through the trades with us. If you want to learn how to do these trades yourself, you need to take our Mastering Advanced Credit Spreads course. It's an amazing, detailed 12-module course teaching you how to fish. It's teaching you exactly what we do in this service. Feel free to email me with any questions, dan@mastertrader.com, greg@mastertrader.com. Good trading, everyone, and see you next week.